Well, hello, everyone, and welcome to your Daily Five. I'm Joe Duarte from Joe Duarte and the MoneyOptions.com, author of the #1 bestseller in options trading for dummies. If you like what you see and hear today, please consider a trial to my website, Joe Duarte and the MoneyOptions.com. Today, I want to talk about trading important trend reversals with Bollinger Bands. So the goals for today's presentation are, #1, defining those Bollinger Bands. #2, using Bollinger Bands to pinpoint meaningful trend changes. And #3, trading on those trend changes. So the first thing we want to do is define the Bollinger Bands. And of course, I'll have an illustration here in a minute, but let's look at the major topics first. These, of course, are the flexible bands that are above and below prices, and they define the normal trading ranges. Of course, that's based on the bell curve and statistical distributions and probabilities. But it holds up very well, as I'll show you as the presentation goes on. So, of course, they were developed by John Bollinger, and you can get all the details in his great book, Bollinger on Bollinger Bands. And the most important thing to remember here is that Bollinger Bands are used in conjunction with moving averages. And, of course, the upper band is defined as traditionally defines price ranges, which are 2 standard deviations above the 20-day moving average. The lower band is traditionally defines price ranges 2 standard deviations below the 20-day moving average. Now, they can be used in conjunction with any other moving average, or they can be tailored to your choice of standard deviations as well. But this is the standard presentation. It's a good place to get started. An example is, of course, if you're doing short-term trading, you can do 10-day moving averages and Bollinger Bands, and of course 5 days. Any day is good as long as you tailor your time frame of your trade to what the Bollinger Band is telling you. And if you want a day trade, you can use minutes, 20 minutes, 10 minutes, and so on. If you're looking at mega trends, you use the 200-day moving average, and I'm going to give you a great example of that at the end of the presentation. The second thing is we want to be able to use Bollinger Bands to pinpoint those meaningful trading ranges. In other words, changes in the trend when the bands and prices behave in certain ways. So you have normal price behavior, and of course that's when prices are inside the bands. Of normal price behavior, and this is important, is when prices rise above or fall below the trading bands. Now, when the trading bands constrict, they signal that volatility is decreasing and a large move of some sort is coming. The problem is you really don't always know the direction, but I'll show you that in some detail in a second here. Now, when prices rise above or fall below those bands, the trend has gone too far in that direction, and a reversal is likely. And of course, that's called a reversal to the mean, and the mean is the moving average. The upper band traditionally defines the price ranges that are 2 standard deviations above the 20-day, while the lower band traditionally defines price ranges 2 standard deviations below the 20-day moving average. And of course, like I said, you can change that anytime you want to. I want to show you how you can set up your own Bollinger Bands on the stock charts trading rig. And so very simple. Of course, you can see the chart up here, but what I really want to focus on is the settings down here. The way I set mine up in this configuration, which is the 20-day moving average and 2 standard deviation bands, is, of course, I go to daily, and of course, a predetermined range. I use a year. The more important part of the settings is that in the overlays, you use Bollinger Bands and 22, which means 20-day moving average and 2 standard deviations. Now, you can change it any way you want, but this is basically the way this works. So first thing to do, obviously, once you understand the Bollinger Bands, is how to set them up on your trading rig. All right, so let's look at the classic illustration of Bollinger Bands, which is the S&P 500 and 20-day moving average. Quick overview here. This is the upper Bollinger Band. This is the lower Bollinger Band. This is the 20-day moving average. And you see that prices generally trade inside the bands. Now, here's where it gets interesting. Every time prices fall below the lower band, as they did in October 2022, you have to consider that a reversal of the trend, or a reversal to the mean, is coming. And of course, that proved to be true right there. You can see a little bit of a bump over here outside the upper band, and a return to the 20-day moving average. Similar situation here and here. Now, the key is when you have the reversal, is that prices are likely to eventually return to the moving average. What happens at the moving average tells you what's about to happen in the trend. Of course, the moving average here proves to be support until it doesn't. And you come back down here and the cycle repeats itself. Now, you can see this multiple times over the last year. Interestingly, in August, when the market topped, we did not get a move outside the bands, but there was a pretty good tag of the band here, and it was preceded by a slight exit above the band. So you can tell the market was getting overbought here. And of course, there was a failure at the 20-day moving average, and here we go. And back here again, you see that trading outside the band and the reversal. So a closer look here shows you that as of September 19th, as of September 21st, 2023, the S&P 500 was trading well outside the lower Bollinger Band. And so some kind of a rebound is certainly to be expected here. And of course, the key is what happens at that 20-day moving average. So you can do the same sort of thing with the 50-day moving average, and you can see generally the same trading pattern. And the greater the moving average, the more meaningful the trend change is likely to be over longer periods of time. So one of the things I like to do is to use the RSI to confirm what happens with the Bollinger Bands. So you see down here in October, we had an oversold reading here. And then, of course, we had a higher high in RSI with a lower low in the market. And that's usually a sign that this was a panic bottom and that you're going to get a rally. And guess what? That's what we got. So what we see here is, of course, overbought readings in RSI to go along with this move outside the Bollinger Band. We saw retracement, but nothing bad happened. And of course, we saw this point here. But the key is that when you add the RSI to the Bollinger Bands and use longer time frames, you might get more meaningful signals for intermediate term trading. And of course, right now we're seeing the same sort of thing that we saw on the 20-day moving average, where the S&P is trading outside of the lower Bollinger Band, and this, of course, has to do with the 50-day moving average. So a reversal here would be even more meaningful than the usual 20-day one. This is probably a familiar chart to people that follow what I do. But again, you can use Bollinger Bands with the New York Stock Exchange Advanced Decline Line and other indicators. And briefly here, same sort of thing. These are the Bollinger Band, 20-day moving average. I use the 50-day as well, and the 200-day. And so you intuitively, you can tell what's going on here. Again, you look for the trading of the advanced decline line above or below the Bollinger Band, and you see what happens. And you can see that time and time again, anytime the advanced decline line falls below outside the lower Bollinger Band, you sometimes get a rebound, or most often get a rebound. And the longer term, the moving average combined with that exit above or below that Bollinger Band, the more meaning the signal has. And of course, I like to use the RSI again to confirm what's going on. And of course, this is the volatility index, CBOE volatility index, and you know, everyone knows that when it rises, it's usually a bad thing for stocks. But when it hits the top and you have a bottom in the advanced decline line, of course, you see the lower Bollinger Band, and everything kind of comes together. So you want to be able to confirm what you see in the Bollinger Bands with other indicators. Now, this is really a big and important price chart here, because this is the 200-day moving average, and this is the upper Bollinger Band that is 2 standard deviations above the upper Bollinger Band, and this one is 2 standard deviations below the 200-day moving average. This is the US 10-year note yield. And the take-home message here is that bond yields, of course, are a huge influence on stock prices. So when bond yields are rising, it's generally a bad thing for stocks. But when bond yields rise so much that they go outside this huge long-term upper Bollinger Band, usually it marks a top in yields. And guess what? This is about October of 2022. Remember that meaningful stock market bottom? Well, it was preceded by this huge trade of bond yields outside the very long-term Bollinger Band. You can see yields came back down. Of course, stocks took off. And again, the 200-day moving average proved to be a place where there was a reversal of the trend, and we saw bond yields rise again. But guess what? Here we are in late September 2023, and now we have an even crazier exit and trade above that upper Bollinger Band for the 200-day moving average on bond yields. Now, what's even more interesting is how long this yields stayed above that band. I mean, it was almost a month before this, which is probably a blow off. And so under normal circumstances, we would want to see this yield fall back within here. And it would be great if it came back down to the 200-day moving average around 3.8%, because that's likely to spur a rally in stocks. So to trade with the bands, a review here. You want to stick with the trend as long as prices remain within the band. You use your moving average and to kind of guide you in that. And you want to look to enter the trades when prices rise above or fall below those bands. Those are those great entry points, you know, if you want to pick bottoms and tops. Of course, you want to buy those stocks at meaningful price bottoms, sell stocks at those meaningful price tops. And, you know, you can use bullish option strategies at the bottom, such as buying calls or selling puts. And of course, I discuss those in detail in my book. You know, the bearish options, of course, you can buy puts when those events like the one we saw with the 10-year note occur. So let's put this together, trading with the bands, okay, using all our indicators. And brief overview, these are volume by price bars over here. I get a lot of questions about this. This is really a simple concept. The bigger the bar, the more important the price level. When there are more than one bar, such as here, you got 3 big bars. This is a huge price point. When prices break above this cluster of bars, it's important. When prices break below, it's equally meaningful, because that means that that the bulls or the bears have won that battle in that price range. Now, let's look at what happened here. This is October 2022. Of course, this is Applied Materials, a well-known technology stock. You can see that Applied Materials, along with the S&P 500, traded below its lower Bollinger Band down here in October 2022. You can see it took off, and you can see that it checked off, moved above the 20-day moving average, moved above the 50-day moving average, moved above a pretty good volume by price bar here. So that shows strength. And guess what? Comes up here, runs into this volume by price bar, which just happens to be around the 200-day moving average, and the 20-day moving average, and the 50-day moving average. So that tells you this price range here is huge, because all the moving averages, volume by price bars, are all clustered there. And then you see that narrowing of the Bollinger Bands here, which tells you a big move is coming. Guess what? It did, but it held at the 50-day, and then it took off. And of course, you know, we see this consolidation here again at the volume by price bars, and eventually it took off because it made it above that price point here around 120. Now, here's the point I'm trying to make. You know, all these things are happening at once, and you're looking for something that helps smooth things out. Well, accumulation distribution and unbalanced volume can help. So you can see that during all this, accumulation distribution was rising. That means that short sellers usually are getting out. So there's a lot of short covering and a lot of activity here. But this trend is telling you that this isn't really a bad situation, and perhaps we're going to come out of it in pretty good shape. Same thing here on balance volume. Rising. When these two lines rise together and in conjunction with everything else that's going on, you pretty much got a bullish trend. Of course, unbalanced volume kind of softened here, which means that buyers in this area were less enthusiastic, but still not in terrible shape. But look at all this. This is just short sellers. They got wiped out here when prices went above 120, and they kept covering their shorts. Now, over here, guess what? We had the Bollinger Band signal. He went out. Prices started getting above that line. This is a little bit of a double top. Unbalanced volume collapsed. Accumulation distribution collapsed. The short sellers came back in. Buyers bailed out. Prices collapsed. So finally, RSI, use it to confirm overbought and oversold and conditions. And when you put all these indicators together, you start getting a very good feel of what's going on. It's busy stuff, and you have to do a lot of checking and rebalancing, but that's how it works. Putting it all together, Bollinger Bands pinpoint meaningful trend changes. It can be used for short, intermediate, and long-term trading decisions. And when used in conjunction with other indicators, they offer the best trading results. That's what we need to do to be the smart money. Put together all our indicators and carefully use them together to confirm one another. But the Bollinger Bands are a great place to start, and then you add all the other layers to make sure that you're heading in the right direction. That's all I have for today. I'm Joe Duarte from Joe Duarte and the moneyoptions.com. If you like what you saw today, please consider a free trial to my website, Joe Duarte and the moneyoptions.com. And thank you all so much for buying my book and making it a #1 bestseller. There's a lot of information there that actually reinforces a lot of the talk today. So you might want to get a copy of that. Of course, there's my Buy Me a Coffee page where I expand on the topics you see on my website, and I reinforce a lot of what you see here on my videos. So you might want to check this out. I love coffee, so buy me one, and I'd appreciate it very much. Recently, I've added a new section called a QQQ Review. That's where I talk about the things that are happening inside that very popular ETF. Of course, there's my weekly real estate update where I talk about what's going on in the housing and real estate market. And there's plenty of special reports and in-depth analysis that goes on there all the time. And I'm always adding new stuff, so check out my Buy Me a Coffee page. I'd really appreciate the support there as well. Finally, as I always say, trading is uncertain, so be prepared.